right? So off the rip, right? Whenever you don't see that it says like NASDAQ or something like that next to it, normally it's probably not a huge company. Once it's in the NASDAQ, it's big. So let's do our fundamental analysis. Woo! All right, so in the last month, it's up 40%, which is automatically, it's just like, oh, whoa there. Whoa there, Captain. So we're probably sitting at the highs or somewhere close to the highs. Their market cap is about 4.5 billion. Again, guys, 4.5 billion dollars when it comes to a company is not large, right? For like any like hundreds of millions, a billion, 2 billion. Once you get past maybe like 5 billion, which it's right around the corner from, then you start getting a little bit more security. But really, like you guys got to understand, like $4 billion nowadays, Elon Musk could come and just wipe that shit out in a second. There's a lot of people that have, tens of billions of dollars. Well, not a lot, but there are enough people. And let's just say if you get like 300 or 400 millionaires, they could do it. So that's a big deal. In total revenue, so they're bringing in about $31 million in revenue. Of the $31 million in revenue that they're bringing in, they're negative 355 million. Automatically not good. Now, why could something like this happen in a technology company? Why would a company that works in nuclear space and in energy and all of that have 355 million negative when they're only making $31 million in revenue? It's called research and development. So you guys, depending on the company that you're looking at, what you're studying, what you're trying to understand, there is something that's called research and development, which is something that, oh God, embarrassing, but it's going to be okay. We'll live past it. All right. So when you have technology companies, something, for example, like an Uber or a SpaceX or a company like that, those are companies that on the front end, when they're in the research and development stage in Airbnb, where they're learning, they're figuring out the market, they're educating other consumers and stuff, you're going to be taking a loss. Most companies take a loss in the beginning stages of their company. And so if they're doing some type of research and development on what the nuclear reactors would look like, the technology behind it, getting uranium or whatever it is that they need to work on it, that's going to cause them to be taking losses before they see any profits. That's an explanation, right? I'm not saying that that's the situation right now. We're going to look into it as we go below, but it's just one of those things where when you're going through your fundamental analysis and you're going down, first you want to check out like what is their revenue versus income, right? Revenue is total money in. That means all of the money that comes in before taxes, before employees, before products, before any of those things. That's your revenue. Your revenue is all of the money that comes in. Your net income, your net is basically after all of your expenses, what you're left with. So they bring in about $31 million and $355 million is in losses. So that's not good. You ever see negative net income, that's automatically a red flag. That automatically kicks it out of the 80%. It's something that you don't want to go heavy in because that just is very risky. You want to be very weary of that. They have only about 428 employees, of which they fired of which they probably had closer to 500, but they fired 56 employees as of late in the last year. The company was founded in 2007. The CEO is John Lawrence Hopkins. Produce Manufacturing. All right. Their IPO date was in 2020, so not too long ago. All right, so NuScale Core provides proprietary and innovative advanced small modular reactors, SMR, nuclear technology, with a mission to help power the global energy transition by delivering safe, scalable, and reliable carbon-free energy. Its products include Voyager SMR plants, energy exploitation E2 centers. The company was founded by Jose N. Reyes in 2007 and is headquartered in Corvallis, Oregon. So we basically understand they work with nuclear reactors, they work with nuclear technology, and their idea is to make clean energy through its products. I want to see if they've actually netted anything since they went public, and no. So they've been losing money year over year for the last 6 years. Their cash has gone up and their debt has gone down. but it seems like their earnings have only gone lower and lower. They seem like they're optimistic for this year, so maybe there's something that's happening that I don't know. But from what I'm seeing here, they're just not profitable. Stock draws retail attention ahead of rival Oklo's results, even as Citi 46% downside. NuScale's Power Corporation stock 12-month price target 17 implies 38% upside. So the stock sinks when their revenue missed, but here's why the retail is still bullish. Let's see why people are still bullish. Despite the revenue miss, retail traders are optimistic about the company's long-term potential. Said NuScale is the only SMR developer with a key regulatory edge amid rising AI-driven energy demand. Okay, cool. Hopkins also highlighted NuScale's use of readily available low-enriched uranium fuel and its strong supplier network as advantages. Yeah. So, I mean, the big thing that we want to see here, the reason that people are being optimistic about it more than anything is, I guess, because of their regulatory edge and the fact that they're like ahead of the game when it comes to nuclear power. One of the reasons why we may not see any profit, again, it goes to the same thing that I was telling you. When you get a company in their research and development stage, when they're like learning, they're figuring it out, they're spending a lot of money on testing products, materials, all of these things. And, once those things are set up, those costs won't repeat again. Once things are established, they won't repeat again. So they're really just kind of riding off of the gains. But honestly, that's what makes it so risky. That's what makes it risky for an investor on the front end. Just the fact that you don't know how this is going to play out. And yeah, they might have an advantage right now at this moment in time, but that doesn't mean that they're going to hold on to it. Why didn't eBay beat Amazon? Leadership. Right, so this is starting off low. There's a lot of volatility here, guys. So now I understand why the percentages are the way that they are. Huge, drastic movements, all kind of on the downside. They're starting to go lateral. I'm sure that those prices are from back in the IPO. Let's open up the scale for the time periods, maybe like a 4-hour. See a little bit more. So they IPO'd around here, and we're close to IPO prices. So I mean, it's not a bad. You're not buying high. It just was really fucking low. It was at $9 and it went up to $12, which is a huge return, but it's not anywhere near this. I wouldn't say it's an 80%, guys. I wouldn't say that this is like an 80% investment. I think that this is more of like a 15. I wouldn't say it's a 5 because there is technology behind it. There's reason why it should work out. There is a future behind it as far as technology. Also, the fact that we have our plug that is in the electrical space and explaining how important it is for our future. We also understand that AI requires a lot of energy and we're only going to be dependent more and more and more and more into it itself. So, that must have messed up the audio. So, I would say it's a 15. I wouldn't say I'm against it. I would just say that you have to be careful when a company's losing, $300 million a year and only making 30. So based off of what we're seeing, it's at $12. It's something that you could put in, maybe buy a couple of shares, maybe put, it just depends on how much money you have. If you have $50,000, you could put a couple thousand in there and you'll be fine. If you have like $5,000, maybe a couple hundred, you know what I mean? Like maybe a couple $100. If it plays out good, I mean, you have a huge upside. It's like $12.90. It could reach 50, which is almost like 4 times your investment, right? So you're putting in 12, you're getting out 50. You put in 100, you're getting out 500. You put in 1,000, you're getting out 5,000. But that's like best case scenario. I'm not saying that that's likely. The profits aren't showing it. He could go bankrupt. Like, just so you know how like most of the time I tell you guys like investing in stocks is awesome because they could just keep going. Like, as long as they're around, they'll go up and eventually the stock price will go up. This could go bankrupt. When you're talking about they're losing $300 million, they have nothing behind it, like, of profit. And then I think that we also read into something about lawsuits happening. That is a possibility of bankruptcy. It doesn't matter if they have like the patents or if they have certain, technology that others don't have, because remember, it's only $4 billion, right? So another electric company like an OUC or like a big dog company could come in and be like, all right, we're going to buy you guys out. they're a publicly traded company. They can't not like they can't stop them. So they'll just come in, buy a majority of shares, and do something different, close them out, bankrupt them, do whatever, take the technology, send it over to the other side, and now you're assed out. That's how you lose money in stocks. Just so you guys know, like if you ever wonder, like why is it that I hear so much about people losing money in stocks when David says that there's no reason why you should lose? That's how you lose, right? You invest in a company that's small enough to be able to affect with money, right? Because the thing is, you got to understand, right? When you have like trillion-dollar companies like Microsoft, first of all, nobody has $1 trillion, right? First and foremost. Second of all, the amount of money, capital, resources, energy that you would need to just have even the slightest effect on something like an Amazon, something like an Apple, something like a $100 billion, $1 trillion companies, it's almost impossible. When you talk about a $4 billion company that's losing hundreds of millions of dollars a year, doesn't have anything that really is like, oh, this is the only way that we can go forward. Another energy company could come, buy them out, buy a majority of shares, just figure out how to sell off the patents, figure out how to get that to somebody else, and then you're asked out. So I would basically put this in a 15%. Watch it closely. We have somebody that's giving us some information. There is upside to it. You're not buying it high. Just understand there is a substantial amount of risk that comes behind what you're jumping into. And then lastly, it's the TSP thing. So the two things that I was on, three things, right? First thing, 15% you can buy. Second thing is the TSP post. So if you guys could go check out this TSP post and see if any of the things that are being here either interest you or that you already know about. And then lastly, turn on your fucking notifications for WhatsApp. I know that it's annoying. Sometimes you get messages that this, bro, but like if you can catch one, because every single time I send out the signals like to buy and to sell, it's always on WhatsApp and on Skool, but Skool doesn't send notifications like WhatsApp. You can stay in the chat on WhatsApp. Skool will just send you an email that you might not even get an alert on. So turn on your fucking WhatsApp. Make sure your notifications are turned on. Just stay on point with it. Go check out the TSP post to see if maybe there's some money that you're leaving on the table that you could be taking advantage of. And then last but not least, if you're going to invest in SMR or what was it called?